to this chamber. Thank you.
Thank you so much, Nishi, and good evening, everyone. I think I'm officially the last person standing between your session and the dinner that I can smell from here. So I promise I will keep it short, sweet, and up to the point. And as my colleague Ishi said, this is about a $1.4 billion deal. So let's tune in and see how real deals are done. I mean, we had incredible sessions earlier during the evening about AI, its impact, infrastructure, but this is about deal making, what goes behind the scenes, how companies are acquired. And I'm really interested in that because I've heard a lot about AI, but I also want to hear how deals done. So it is my pleasure to introduce a seasoned executive who has led multiple companies across startups and enterprise. He's a seasoned CEO with multiple roles, Chief Revenue Officer at Rackspace, Chief Executive Officer at Tenfold, which got acquired, CEO of Alvira and Aspect, formerly known as Aspect, and as Ishi said, more recently, CEO of Pros Holdings, which got acquired for $1.4 billion by a PE firm named Thoma Bravo TV. So, ladies and gentlemen, please join me in welcoming Jeff Cotten, CEO of Pros. Thank you, Jeff. Thank you.
Can you hear me? All right, good. It's good to be here. Thank you. Really appreciate the warm welcome and looking forward to the discussion. Hopefully, we'll get you to dinner quick.
Yeah. I think, do you want to sit down or do you want to stand up? What do you want to do?
Dan, whatever.
Okay, I think we can stand up, right? So, Jeff, thank you again for, driving in from Houston last minute. I know we had some crazy weather last couple of days.
Yep.
And you're really making time and, coming in for this last minute. So really appreciate that, Jeff.
No problem.
So let's get started with the big one, Jeff. Pros $1.4 billion acquisition. Walk us through the story behind it. What really mattered in getting that deal across the finish line? Spill the beans now, fully. It's all over.
Well, the good news is Pros was a publicly traded company, so all of this is public. We can share a lot of it. First, let me tell you what Pros is for those of you who don't know. We actually have a former employee of Pros in here, which is crazy. Pros is an over 40-year-old company spun out of Continental Airlines, so obviously its roots are in Houston. But it is an actual, I'm not going to call it AI native company because these guys started developing neural networks and machine learning back in the 90s for airline pricing. And before you start throwing tomatoes at me, we do not do personalized pricing. We look at time of day, day of week, city pair locations, and we help an airline maximize which aircraft they should operate on a route, day of the week, etc., and how to look at pricing at different origin destination pairs to understand if I need to save a lot of business seats from Dallas to Miami or Dallas to New York, I can now help an airline offer really cheap fares advance purchased. So actually, since Pros was invented in the 90s, airline pricing has come down when you inflation adjust. Pros took the algorithms that it developed and the neural networks that it developed and actually started bringing those out into other industries. So that's what Pros largely did. It's a fintech company that has developed a lot of AI before AI was even really a word or a thing. So, as Chirag just mentioned, while we've been around a long time, it has obviously caught the eye of a lot of different financial investors. As a publicly traded company, everyone has a lot of visibility into the company, what it does, what the growth trajectory of the business has been, and everyone now, especially financial sponsors, want to acquire into anything that is perceived as AI. And I loved what Sandeep said a few minutes ago, because I've been in private equity now a lot over the last 10 years as well. And all financial sponsors right now are looking for companies who have this defensive moat and specifically solving vertical solutions. And obviously that is what Pros does. We have very specific industry solutions that have deterministic algorithms that are very differentiated and something that the general purpose non-deterministic algorithms cannot solve. So that is really what attracted Thoma Bravo in this case. It was a competitive process. There were multiple strategic interests as well as private investor sponsors, all because of that vertical domain expertise with AI capabilities.
Thank you so much, Jeff. With vibe coding coming in, I thought, I can vibe code anything out, but that doesn't seem the case, right? So, yeah, thank you so much for the insight. So, Jeff, you had a front row seat on how private equity thinks right now when they are looking at firms. So, from a pattern recognition, what's changing in how PE firms evaluate AI-driven companies, especially around growth, discipline, execution, and risk? And I'm also speaking on behalf of the audience and some of who are founders and operators who possibly may be paying attention to the next 12, 24 months, how the outlook is.
Yeah, so a couple of things. First of all, private equity has shifted a lot. When you look at PE firms today and you look at their portfolios, a lot of them are sitting on companies that were acquired in the 21-22 time frame. And those companies have not performed well. They went after horizontal software plays big time. And we all know and can see what's happening with horizontal software. And this is sort of the hangover that's happening with SaaS and valuations being down. Number one, you've got the big data platforms, the CRMs that are chipping away at a lot of horizontal SaaS platforms. And now, largely agentic has taken over and frankly started to replace the interfaces that a lot of those SaaS companies were. And so private equity has learned that lesson the hard way, unfortunately for them. So now they are very much going after vertical solutions. I will tell you, private equity has also gotten very smart to understanding that really they need growth, but they can go solve the cost equation now with AI. In fact, I worked with my last private equity firm to develop a framework where they can go in now and launch a template in 4 key areas to go drive cost out of the business. So if they can find a company that has that defensive moat and a vertical solution, doesn't even have to be AI native, although obviously they love to find companies that have solved a vertical problem with some sort of algorithmic approach, whether it's leveraging LLMs and all of the latest generative AI, or it is a true deterministic algorithm, which is even more valuable to most private equity firms today. And so that is really what they're prioritizing, and they know that they can go drive cost efficiency so that ultimately they can get to that magical rule of 40, right? Rule of 40 is still the benchmark. There's no doubt about it. So a company that's growing at 10 to 20%, they can easily go drive the profitability at 20% or better. The new term actually is starting to become rule of 50, rule of 60, is you can start to now drive a lot of the productivity improvement into companies via all of the Gen AI that we've been talking about.
Yeah, interesting. And I heard you say the word moat twice.
Yeah.
Right. So I've been thinking in my mind, what are the ways I can have a moat in a SaaS if I'm building a company? I mean, is it intellectual property, IP, patents? I guess the patent office is all inundated with patents with AI and algorithms. Any thoughts and comments on that, maybe?
Yeah, it'd be interesting to hear sort of thoughts in the room on patents. Patents are so slow. And we've been talking about the speed of innovation here today. It's becoming a thing of how do you lock down and protect IP, especially in deals, because so much of the IP today isn't necessarily patent protected. But certainly IP is absolutely the name of the game. And I was just talking to a private equity firm actually who's based here in Austin, sort of a mid-cap private equity firm. And
we've got one here in the room.
We do,
actually,
yeah.
More than one, right?
Oh, yes. Well, we've got at least one. S3 I know well. But they had a really interesting perspective on buying companies right now and then taking a Windsurf or some sort of a code generation platform and completely rewriting the underlying IP. So you're maintaining the ultimate sort of concept of what problem you're solving, but you're replacing the underlying technology very, very quickly. And one of the challenges, obviously, all of the tech debt, most of the sort of vertical SaaS that's out there requires complex integration with other systems, and they understand this challenge, and obviously the ability to interoperate and integrate is rapidly better and faster when you've got a more modern a platform that can go do auto discovery of data APIs and build in automatic connectors, leveraging a code generator like Windsurf. And you don't even have to do a lot of the human systems integration work that used to happen. And so this is becoming yet sort of another play that private equity firms right now are really starting to employ, is rewrite the core underlying tech platform and stack, leveraging the IP that ultimately they acquired, conceptually solving a vertical business problem.
Very interesting thoughts, Jeff. Let's move on to premium. And I was doing some homework on the acquisition. 41% premium over the market price, which got my attention. So, looking back, what specific AI capabilities or strategic choices do you believe help pros command a premium valuation of 41%? I think it's 41 and 2%.
Yeah, something like that, 41 and change. Look, there were two things. Number one, pros had once again taken that initial vertical product or problem that it solved in airlines and applied it to broader industries. And obviously we all know the more that you can have broader TAM expansion or total addressable market capabilities, that makes a company much more valuable. But that was a critical shift and pivot the company had to make early in its days. And so obviously that's one of the key things and one of the challenges of a lot of companies today. This is one of the challenges of vertical plays, is if you get into a vertical. There's a great transportation tech platform that's here in Austin, and they solve unbelievable logistic problems for trucking. But getting out of that trucking industry is going to be a real challenge. But if you can figure out a way to take the algorithms and the platform that you've built and broaden that to other industries and solve other use case problems, that's what they're really looking for. That's going to command a higher premium. The second then is the company had long been unprofitable. We all know, especially all the VC folks that were here in the room earlier, you're chasing growth. You don't necessarily care about profitability. Pros did that for a really long time, commanded really high valuations as a publicly traded company. But ultimately, as revenue slows growth-wise in terms of as you get bigger in law of large numbers, ultimately you've got to then go after profitability, ultimately to seek after that rule of 40. And the company had invested in underlying capabilities internally to show that it could actually achieve profitability and then start to improve and scale for profitability. And so those are the two things that certainly I would say. This is obviously one of the challenges as an entrepreneur myself who had a startup 2 companies ago. This is ultimately the challenge, right? How do you actually get to profitability? And when is the right time to go and do that? If you're R40 growth, you don't really have to get there. Once you start getting below 40, you get to 30, 25 and below, whether it's public markets or private, they're going to expect you to figure out how to get to profitability. But the beauty is we now have new tools to be able to go help us deploy inside of an organization to really get that profitability.
Interesting. I would like to know more about those tools, right? Right. So, moving on, if we were stepping in as a CEO role today, whether it's a startup or a mid-sized company, what are the first 2 or 3 actions you would take around AI right now?
Well, having just stepped in May into this particular company, I can tell you what I did to directly answer to that. First and foremost is to look internally at what are we doing across our HR and employee base, what are we doing in our IT infrastructure support base, what are we doing in our customer support base, and then what are we doing for product development and code generation. Those are sort of the 4 big areas of this template that I referenced that we developed at the last private equity firm. I came in and deployed that here at Pros. What was interesting is the prior leadership team had challenged everyone in the company to go figure out, how do you deploy an agent? They were challenging admins, as an example, to say, hey, stop scheduling my travel on Google Flights or whatever and build an agent to go do that. Okay, it's interesting. And that grassroots sort of piques people's curiosities and get people's actually thinking about it. but it doesn't really drive the ROI. And I hear today, and I see all these studies out there that executives are getting very frustrated because it's not hitting the bottom line at the moment. EBIT is not necessarily improving for most companies as they're spending tons of dollars doing proof of concepts, rolling things out, etc. And so we changed the approach and we went after those 4 key areas. So first, in customer support, we started with an agent that we went and trained on all of our internal training for humans, all of our support knowledge bases. We used it for our support engineers at first, and then we turned it loose as self-service to our customers. I would argue this is a huge killer move inside of most large enterprises today, something you can go build on your own. You don't have to go buy off-the-shelf software to go and do that. On the employee side with HR, how do you go take all the questions employees are constantly asking? When's the next holiday? Well, how do my benefits work? You know, I need to change something in my payroll. Build an agent to go and handle that, and you take huge pressure off of your HR support organization. Do the same thing for IT and support. And then the final area was that code-based platform. We went and totally transformed our engineering organization and deployed Windsurf, and we now 40% of all product code that gets pushed as of the last quarter in Q4 is generated by an automated bot. And so we have really increased the pace now that we can launch customer demands into our product.
Interesting. I think we have like a few more minutes. I would like to take a question maybe from the audience. If anybody's got a question for Jeff, since we have like about 3 minutes. Raise your hands, please, if you have a question. That's what it seems like. One question. Yes, Dr. Adil.
Jeff, thank you very much. What is your prediction on physical AI?
Physical AI, meaning robotics.
Yeah.
Well, so this is a really interesting question. So I talked a little, I love to talk about this. I talked a little bit about deterministic and non-deterministic. I don't know if everybody in the room really knows what that means, but you know, the LLMs are non-deterministic, and so they're you know, you can have a conversation with it, and like a human, if you ask it the same question 5 times, it doesn't give you the exact same words back exactly 5 times, right? Well, if you think about the physical world and you think about the world that I'm in, you know, American Airlines is not going to be too happy if my algorithms are hallucinating and saying, oh, well, it's $280 right now and it's $2 the next minute, right? To a different person. So there's different use cases out in the world, and non-deterministic algorithms like LLMs work great for a lot of use cases, but they don't work great for, especially in the physical world. And I don't think this is getting enough attention right now. I certainly know as a publicly traded CEO, this was the number one question I was getting by all of Wall Street investors and analysts was, why isn't you know, AI just going to kill your company and kill all SaaS? And the answer is because there's a lot of different use cases, and physical is certainly one where you've got to have deterministic algorithms. I'm actually really optimistic, though, about what we're seeing obviously right now in the transportation world. We've seen it in aircraft for a long time, that you know, aircraft can autonomously be flown. I'm an investor in Archer Aviation, for those of you who don't know it. I'm very confident that they're going to have an autonomous flying taxi before the next year or so. And what I see right now in robotics, I'm actually really involved at UT here in Austin with the robotics program here, and it is unbelievable physically what these machines now are able to do task-wise, and they're 100% autonomous. Now, they're not using ChatGPT or an LLM version to drive their software. Once again, these are, you know, very sophisticated deterministic networks that they've developed for those physical things. But I'm actually really optimistic about that. I'm less optimistic on the software side. I actually think the cyber issue is a much bigger issue. I mean, I'll just share, we have seen attacks recently where number one, it's an agent bot that is spearing a phishing attack into an organization. A human responds. Even with MFA, they then use an agent to bomb the MFA. So then the MFA actually goes through, because the human's in there going, wait a second, I'm getting 500 of these, I don't know which one's mine. And that's just a quick example, right? They're going to be doing the same thing to the agent itself, by the way, right? And so I actually think in the software world where these have to be open systems or we can't actually use them, this is a much bigger challenge. And I think the cyber world, the security breach rule is going to cause a much bigger challenge and slow our pace down there more than it will in the physical, where these are mostly going to be closed systems with deterministic algorithms, and you're not going to have as many of the challenges. Yeah.
And so I just want to take 30 seconds to share something, since you mentioned about security, and Mark covered it early on in the panel, as far as, security is concerned, and the pace of AI, right? I mean, if you talk to a startup, they just want to go super fast, and companies also want to go super fast. And we had a discussion early on with the CXOs. I practice information security myself, so one of the key themes that came out is it all depends upon the risk profile of your organization. If you are a JP Morgan, you want to be extremely careful with AI and AI security. But if you are a retail organization, the CIO I that spoke to was Tecovas, right? They sell cowboy boots. It's a $300 million company. Their risk appetite is a lot more because they have to keep up the pace in the marketplace, and they're actually going aggressively after AI and actually wipe coding tools, Claude, to ensure they're staying up, and they're not spending dollars in expensive COTS software, right? And that's another interesting point that we discussed. Adobe stock had some downward headwinds recently, and I've personally experienced that. I had to build a logo for the company, and I just went to ChatGPT, Banana Pro. My logo was done. I didn't have to hire a marketing person. I didn't have to hire that person, and then marketing person doesn't have to buy Adobe because that's what they use, and that's clear downstream impact to a company, pure SaaS company like Adobe, with the numbers. So it'll be interesting on how companies stay ahead of the competition with SaaS, and also how they secure, especially if they are large financial institutions. So with that, Jeff, I think you're out of time. I want to take a moment again to thank you for sharing the insights, and especially driving from Houston here. Ladies and gentlemen, Jeff Cotten, CEO, Pros.
Thank you.
Thank you, Jeff. Thank you.
Moving on, we're about